Hi, happy Monday, everybody. I'm Joe Teague, Equity Armor Investments.
Hey, I'm Brian Stutland here, Equity Armor Investments portfolio manager here with my colleague Joe. We're talking markets. We're talking movement here today. Obviously, market up pretty big to start on the open, and we've got lots to talk about really on our show today. We have our trade of the week. We're talking NVIDIA. Yes, that's everybody's popular favorite thing to discuss, but it's a stock that we have some interesting on, and we'll give you our trade coming up at the end of the show.
Yeah, listen, Brian, NVIDIA, we had a trade on it last week. It didn't go our way. I still think the chart's looking good for a potential bounce here in NVIDIA. I don't want to miss this, so I'm going to re-up on it. I think there is potential, so stick around to the end of the show. But it's a busy week. There is actually some sneaky important news to get through this week. And we're at a very important point for the market. The market fell below its 200-day moving average decisively, turned around. Now we're coming back up towards it. And the question is, Brian, is this going to be an area of resistance where the market turns around south again, and we're looking at a recession where we're going to see a 20% plus drop in the markets? Or are we at an area where, hey, we had our little correction, now we're going to bounce through, rip through the upside, and challenge all-time highs again?
Well, it looks like I would say one level I was watching in the NASDAQ is the 20,000 level here. I thought it was a key level. There's been a clear, defined trend channel and an upward movement that I think is sort of an interesting take because it has a lot of similarities to an upward channel that we saw from the bottom of 2020 to 2021. And then we obviously saw a fairly sizable correction in the markets headed into 2022. Very similar pattern taking shape where we've sort of broken this uptrend in technology, which has been such the leader. The big AI play for everybody has really driven the markets higher, but obviously the Mag 7 and those types of names lagging this year has really been a concern. But now we're starting to break back above that 20,000 level, which I think was a key resistance, may start to act as maybe support, and maybe the market's gotten through this and turn around. It is. We are getting through the most volatile time of the year, Joe. We always talk about March being the most volatile time, and certainly we're coming to the end of that, so we'll see what happens.
Yeah, well, let's get it going. Let's start the show. Thanks, everybody, again for joining. It's good to be here every week. It's good to talk about the markets. I hope we're bringing something of value to you. If it is important to you, let us know. If you have any questions throughout the show, feel free to drop a comment. We're going to be looking at some charts in a second. So if you got any charts you want me to look at and talk about, just throw it in there. We will do so. But as we go through, we'll share our comments. You want to share yours too. If we disagree, that's fine. That's what makes a marketplace, right? So anyways, let's get going and let's start the show. Welcome to the Trading Zone. I'm Joe Teague for Equity Armor Investments, portfolio manager. And with me, as always, is Brian Stutland. Brian, how you doing?
Great. Happy Monday, Joe.
Yeah. Where are you trading from today?
I am from the great country of the Dominican Republic right now. Money never sleeps. Up on. Sorry for the jungle background noise, but it is what it is. I still want to give my take on the market because I think we have an interesting one, and so I stopped from ravaging through the rainforest to come and speak with you today.
Yeah, well, let's take a look at what we got going on this week. Some big events, consumer confidence. I think that could be crucial. Again, this is kind of a sign of a potentially softening consumer. They've really been carrying the economy for a long time. If the consumer in the U.S. softens, the economy certainly will soften. So we want to make sure that consumer confidence doesn't just fall through the floor here. We want to make sure it remains at a reasonable level. GDP final estimate coming out later this week. Maybe that'll be something for some traders, but also the PCE. That's the Fed's preferred look at inflation. That's coming at the end of the week. So some big week, some sneaky data. This will be some market movers.
I think the most interesting thing will be the PCE. The interesting thing will be the PCE. Obviously, that's an important inflation indication here. Although the Fed really has said, if you turn the clocks back to last week on the Federal Reserve decision, we heard them basically say they need to wait and see what the tariffs do and how that impacts inflation. They indicated that maybe just tariffs would be sort of transitory. And of course, everybody hates that word. But the markets have kind of rallied thinking that, well, maybe actually transitory will be the case, I feel like, this time around. And maybe it is a one-time bump and not an ongoing monetary supply problem like we had in 2022. And so there'll be a lot of wait and see to that versus maybe some monthly data on inflation that comes out of.
And to your point, there's a lot of Fed speak coming on this week, Brian. A lot of speakers are coming out. Mark will be looking through all those speeches to see what that means for potential rate cuts. I think that is crucial too, because maybe last week people were overlooking, the rate decision that the QT is getting smaller. There's less tightening. Maybe it could come to an end. Maybe the Fed put is back on the market if the tariffs do play a big role on the economy. Maybe the Fed will come back out there and do some stimulus. Specifically, less so with interest rates, but more with the quantitative easing and tightening. So if they're doing less tightening, that's just more money in the system. So I think that's something maybe we should not forget here as we move forward this year. If the economy slows down, the Fed has more tools just in the interest rates to keep us going. And that's probably a big reason why we saw the skew coming crashing in. And it just seemed like this market found a floor at just kind of just a random level. It happened to be like the 200-week moving average, but it just found this floor and the market just kind of stabilized here. There does not seem to be fear to the downside at that level, which is shocking because it seems like the economy is rolling over. It seems like there was a lot of fear just a minute ago, but I think the Fed put maybe being there might be one crucial reason. Again, this is going to be a big week for me as we're going to challenge this 200-day moving average in the S&P.
Well, for those that maybe are tuning in for the first time, if you look at the skew, this index is an indicator of the value of puts versus the value of the same delta call. So what we do is we like to look at this because if it shows that puts are getting bid up, that means the skew index is moving higher. We tend to see a bigger buyer of puts from maybe the institutional side on the S&P 500, and that would be sort of a bearish indicator. What we have seen now, though, is the skew index dropping, meaning call buyers are coming back into the market. And what tends to happen is this sort of ends up being a leading indicator as a bullish move to the upside. Now, we're not back down to levels that we were, let's call it in 2024, near those lows, but we are sort of making higher lows in the skew index, which means there's still a level of uncertainty and fear out there. But that kind of makes sense given all the uncertainty around tariffs and what the Trump administration is going to do, the policies, the geopolitical. It makes sense that we're a little bit higher up. But it is interesting that this last week, call buyers came flushing into the market and we got to run the market.
Yeah, and we'll see how this plays out if this indeed does turn into a higher low or if this continues lower this week. So I think if the 200-day moving average is breached decisively, you will see this volatility come in nicely. It's already in. The VIX is under 19. It's coming in nicely, but again, I think we're in this like elevated range. 16 to 20 is kind of what we should expect. You get over the 20, we should see some quick moves in the VIX futures. This has come down, of course, a lot in a week, and we're getting close to this normalization here. We're not quite in this contango pattern in the spot to the front, but the front to the second month future we're getting close to the normal pattern of the VIX. It's what the bulls want to see for sure. You want to see this contango existing. I think that's what the market wants. If we're looking for the market to go higher, it's just watching it play out last week. It was high this week. It's back down to a reasonable level. Nothing to say that next week it's not going to be high again.
Well, and you also mentioned that 16 to 20 maybe is the norm for the VIX. I mean, look at just 2 months ago where the VIX futures curve was. I would say that's probably the bottom end of the range, maybe for a little bit of time until, maybe the summer months, like summer doldrums, if we do get that in July or something like that, maybe the VIX futures curve gets back down to that lower end of the level. but we're somewhere in between, last week and where the low end would be. So I think any further drop here in volatility probably is an indicator to maybe think about being a buyer of it.
Yeah. Listen, Brian, add a buck, 15 to 21. I think that's the range. I think that's about right. That's what this chart's showing. So I think that's what we should be watching for these futures. Here's the big chart. Here's the S&P 500. As I was talking about, found support. I mean, really good buying activity here from my point of view. We found some support last couple of weeks. Getting in here, just really choppy action to say the least. A lot of fear out there. Great to find the support. Great to have this higher low here. But this is going to be the big question here, Brian. Are we going to be looking at this where we touch this 200-day moving average and then turn lower? Or are we going to be able to race through this 200-day moving average and then have it turn into support and then go higher? So that's really important for me, really crucial level. I think as a portfolio manager, it really sets up for some important, portfolio dynamics here, just knowing we're at this crucial level. Maybe we got a gift, a little dead cat bounce up to this 200-day moving average, or maybe, we're about to see the market race higher.
Yeah. It's interesting because, Joe, we brought up this chart here on the S&P 500 total return because we wanted to factor in dividend and whatnot as the return of the market to get a clearer view of where that 200-day moving average is. And you can see we're getting pretty close up to that. So, yeah, we talked about if volatility falls a little bit more from here. I mean, what you're kind of depicting here is being long a straddle where it's either going to crash through the 200-day and go back up again, or it's going to sort of resist against that. So I would be watching that. I'd be looking for areas to maybe convert my long stock into long calls. I would be maybe looking to buy a put potentially and hope I lose and that the market moves higher. But either way, this might be an area sort of to kind of add long optionality to a position.
Yeah, and listen, this is just an area we should expect a little bit of movement coming up at the end of the month. We also know that can be a bullish sign after the options expiration last week of the month, last week of the quarter. We'll see if that comes to fruition. We also have that S&P positioning that happens at the end of the quarter with the JP Morgan hedged equity. We saw we were close to that strike last week, kind of pushing away from that as it usually does. We'll see that play out. The NASDAQ on a short-term.
What was that JP Morgan strike? Because I think that's actually interesting to maybe bring up.
Yeah, right around 55.
I think that'll be an interesting play coming here.
Yeah, 55.60 in the S&P 500.
Right. So what typically, and just so people know, what typically happens is that's the strike, that's a protective put that JP Morgan hedged equity, which has billions of dollars in it, has an influence factor on optionality in the S&P. That's the big strike that they buy the put on. So what happens is market makers are short that strike. And what typically will happen is that the market, if it goes below that strike, market makers will need to short the market to sort of cover their position. If it goes above the strike, they'll need to buy the market. So they have to negative gamma scalp themselves, sort of, as we say in the option world. And that will tend to push the markets away from that strike, that short strike. So we got down, we're bouncing away from it. Now it's a question of will it stay bounced or will it rip all the way back down through that strike? So that's something to watch if the market sort of fail at this 200-day moving average heading into the end of March.
Yeah, and I think our viewers have heard of the gamma squeeze. That's really what Brian's talking about in a nutshell. The dealers have a lot of position, really big position at this at that strike. Pushing through that kind of forces those dealers to keep on selling and selling and selling as it goes lower and lower and lower. So it's just something to watch through, especially as we're coming into the last few days of the month. Absolutely, it's something to watch as we get through. As I pulled up the futures right there, live, just taking a look at that. Also here is the QQQ, Brian. We broke that trend line last week really decisively. This is looking really positive to me. I love seeing this. I got a higher high here coming through here this morning. It looks promising for some tech stocks.
Yeah, it almost feels like a little double bottom. Maybe what's that level? Like call it 485-ish or so that we've broken above. That'll probably be a level to watch in the QQQs. This is the NASDAQ ETF. And yeah, right there. I'm watching that level. That's sort of I'm probably a buyer of this market here, and then watching that level as a sort of a stop out to this trade. And that higher level, 500 level, that's probably the price target, right? That we need to try and get up and maybe retest.
That's what I'm seeing. I mean, a patient trade might be to wait to see if it comes back down to this level, get another chance to initiate long. Got a really tight stop there. Momentum trade is to go here looking for this 500. Absolutely, that's what I'm seeing. But we're seeing that across the board. Lots of other tech stocks are looking that. We had Micron earnings last week. A lot of AI trades, which have kind of stalled out in the last few months. The king of the AI trade, of course, Brian, is NVIDIA. And I actually, we all know about NVIDIA. We know everyone talks about how expensive it is, but I want to bring up a chart here and look at how expensive it really is. So this is NVIDIA in black here, Brian, and this is its best PE price in orange. So if we look through here, historically, the best PE price has been a lot higher, especially recently when we've seen a lot of the gains coming from NVIDIA.
Yeah, so I mean, obviously PE was very high because people had the earnings not caught up to what the forecasts were, right? The amount of growth that this company has seen really in the last like 2 years. So we finally got that. PEs have kind of like come back down in line. I think NVIDIA, just from a valuation perspective, is becoming very, very attractive. I was looking at some other just consumer discretionary names like a Starbucks. And even looking at the forward PE, the next 12 months, Starbucks trading at a higher PE than NVIDIA right now. So NVIDIA really an interesting play from a value point. And I thought I'd never say that, right? A stock that's been up so tremendously in the last, year, let's call it, heading into the beginning of this year. And here we are sitting at, below 25 forward-looking PE on this stock. It seems very attractive.
Yeah, and it came down to some lower levels here. Let's take a look at it on a live chart here. It came down under 120. Last week we did another trade on it, Brian. We were looking for a bounce, didn't get it. I think I'm just content going back here to the well here, looking for us to complete maybe this cup and handle here would be really nice. But absolutely getting back to 200-day moving average is what I'm looking at here, and no question, just think it's a reasonable thing to look at in this week. If we do get a positive week, if we do get follow through on last week's, I think NVIDIA a chance to go back to 127 or higher really looks attractive to me to play this with the call options specifically right now.
Yeah, using calls is interesting. I talked about getting long optionality in this market with volatility coming back down. And NVIDIA is probably one of those. You couple that with what we showed earlier on the NASDAQ and the triple Qs. If they are to go to 500, I have to believe that NVIDIA participates in that rally. And Joe, you lined up a trade here where, we line up a trade here. This is something that's expiring very shortly, right? This is the end of the week. So we're playing for a short-term continuous rally here. NVIDIA, basically we're looking at the 120 strike, paying $2.20. So it's a little less than 2%. NVIDIA options are expensive, there's no doubt, which means I want to trade around this if we get some market movement, selling an option somewhere maybe to offset the cost. But it feels like the bounce is here, and this might be the right play to play the rest of the week at least on this stock.
Yeah, that's where I'm at. I'm in on this. Rebounding from last week, getting another trade in here on NVIDIA. I think that's the way to go. Just going back to the well here, because NVIDIA is the powerhouse of the AI trade, and I think I'm not ready to give up on the AI trade. It's really the Mag 7 has stalled, Brian. The AI trade in general has stalled. I don't see it going anywhere, even in an economic slowdown. If anything, in an economic slowdown, the way we're going to look to revitalize the economy is to do some more building projects within AI. So for me, not worried about this at all, and looking forward to a bright future for AI and NVIDIA.
Yeah. So again, this is a weekly. So we do have obviously a longer term bias here that we feel like NVIDIA's valuation. I mean, that's not going to affect the stock necessarily this week. A short-term trade, one that we will update as the week moves on. So if you have a subscription to our weekly trading programs, where we send email alerts directly to your inbox, so you can act on this, we'll continue to update and send out trade alerts on that in this trade. And the NASDAQ moves around here, and we get closer to the 200-day moving average in the NASDAQ, S&P trading right near there. So this should be a pretty volatile week to be sort of tuning in and watching and seeing how this reacts. But I think this, I'm not saying I'm a gambler necessarily, but if I was going to the casino, I feel like this trade, I have the odds a little bit in my favor here because of the momentum of the breakout in the NASDAQ that we saw this week and the low valuation of NVIDIA being one that will continue to participate with all those other names.
Yeah, absolutely. I'm with you there, Brian. Not a big fan of casinos because I like trading, and I like trading when I have edge on my side. I'd love to be the house at the casino, but they don't let me do that when I walk in there. Anyways, it's been a fun week of talking markets with everybody. I am Joe Teague of Equity Armor Investments. Tune in every Monday, 10 o'clock Eastern time. We'll be here. We'll be talking markets. We'll be talking volatility. We'll be looking at all the trades, looking at how to design a portfolio in the landscape. Happy to do all that every week, and it's always a fun time. Brian, you got any final words?
Just make sure to go check out Equity Armor Investments. Check out our trading program, subscription program. We have some really cool deals working with Tradier. If you sign up with an account there, you actually get 4 months free, and you get all 3 of the trading strategies for free. Also, for a short time too, one of the trading programs we're offering totally free for right now. So go on there, sign up, get that at the very least. It's sort of our liquid alternative portfolio management ideas. So go check out Equity Armor Investments for all the fun things that we have and that we offer as an advisory business. Of course, this show is always just Joe, myself, and your opinion on the market. And we love jumping on here every week. Tune in every Monday, 10 a.m. Eastern time. We'll see you next week.
Peace.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.